Good afternoon, it's September 16th, and this is another weekly wrap up with the trading experts. Let's get right into it. Okay, so last we talked, Friday, disaster struck in the market. Everyone thought the top was in, everyone thought we were done. Well, we come out Monday firing up. Everyone thinks another V bottom. Now, look at this area, this 212 area. This is a major support level. It used to be, we're going to a weekly chart now. Here's the weekly of the S&P 500 futures. This 212 level was previous resistance for about 2 years, dating all the way back to the Alibaba IPO a couple summers ago, right around this 212. So we see the market coming right in and it approaches this 212 level fast. There's going to be a reaction quickly moving higher right off this 212 level. After Monday, everyone thought, the bottom was in. This is just another V bottom in the market by the dip. We should be back at all-time highs very soon. And then we took a bunch of swing longs home Monday, and it was a little bit of a trap because we were down, right back down Tuesday. So the thinking here is that we just got too ahead of ourselves here. It just needed some time to consolidate. You see us holding this monster level at 212 and just buying off it every single day. So we're thinking it's a base here, and we're looking for it to move higher. But with that said, there's a huge meeting, Fed meeting next Wednesday. So this is definitely not super risky environment. You don't want to be long to the teeth, short to the teeth. You want to be flexible out here. That's the advantage of being a short-term trader, is that you can always be flexible. You don't have to have major positions on, take big losses, big wins every day. You can pick and choose, and that's one of the main advantages. So, let's look at some charts from around the market. Okay, first, to start off the week, Apple with some news. We came in Monday with some news from AT&T that their pre-orders had sold out. It was something like 5 or 6 times greater than any other pre-order. And look at this move. Holy moly. Just literally taking the whole market higher with itself. I think they gained something like $80 billion this week. Yeah, not so bad. So, going forward, we look at the Apple weekly. Let's look at the monthly. Just broke out of this nice descending channel right here. Alright? And we want this thing to chill out for a bit because it looks like it's got a crash course for all-time highs, and we'd like a chance to get in. So going forward, definitely Apple's one to watch. You want to watch that consolidate. Any bull flag it has, that's the go-to stock of the market right now. We spoke last week, so Friday. This was Friday right here in Wynn. We talked about the strength in the casinos. We talked about hopefully it would give us a setup because it showed so much relative strength. Here's this day, and remember what we did in the market. That was this day. Everything was destroyed. Wynn, however, Wynn held up. Wynn threw in a green bar, and look what happens. Monday, Tuesday, Wednesday, Thursday, Friday. Every single day it's up. The market catches a bid whatsoever, this thing explodes. So that's a great lesson in relative strength right there, right in the market. You see these names thrown in nice, decent green bars when the market's down 2.5%. That's a huge indicator. You want to be in that name long eventually when it sets up. This didn't really give us a chance to get in, but it's a great lesson to know. It's definitely something we focus on, and definitely going to be watched going forward. Today we had a nice little IPO on our hands. Everbridge. Here's a 15-minute chart. They priced, I forget what they priced, I believe 12 to 14. They opened right around 12. Little down move off the open. They tried to shake everyone out. There's a huge bid at $12. Got taken out. A bunch of day traders took a loss here. But you get right back in, tight risk, and this thing just went and went and went and went and went. We love these IPOs because they have no resistance, no support. Everything is price discovery. And as we've seen in the market, let's look at Twilio, the daily. Let's zoom out. Look at this. Look at this move. They opened up at $22. A few weeks later, they're at 67. Nuts. These IPOs are momentum to the core because everything is just price discovery. There's no support, no resistance. They can run and run and run, and people don't really focus on valuations off the bat as much. I mean, you'll hear it on CNBC like, oh, this is worth yada 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 now. But as we see with the price action determines all. Here's another one. It was Feasty off the market. Pretty tough here, tough start, but off. What is this? Off $38. Ran to $48 in 3, 4, 5 days. Huge. So the moves that IPOs make are A+ for day traders. That's really what we want to focus on. So let's take a look at our trade of the week from last week, NSTG. We talked about over the 1677 pivot. We wanted to get long 1680-ish. Okay, so it triggers this day. Nice volume. We have a stop here at the low 1611, and we're just playing this thing for follow through. Our target was 19. If we look at a weekly chart, you see the resistance up here. Big sellers up there. You know that. We wanted to play off this inside week perfectly. Worked perfectly. And now you just trim and trail. You take profit to cover the trade, but you got to let it run because right now it's got some momentum, and you want to be a part of it all the way through until it's done. Now, overall, trading environment right now, we've been very choppy the past 6 days. Very, very, very choppy. To be in a risk-on environment, a true swing trading environment, there's one great indicator we like to use, and it's the 8 and 21 day simple moving averages. It's this blue one right here. That's the 8 day. And this red one right here, that's the 21 day. When we're on top of both of these, look at these areas. That's when you want to be getting into positions. That's when you want to be holding them, swinging long, buying dips, because you're just trending higher at this point. When you're below it, as you can see over here, you look back, and every time we're below it, like substantially, it's a choppy trading environment. Up one day, down the next. Very hard to stay in a position because the market's just going to take these stocks whichever way it wants to. So going forward, it being a risk-off environment, well, we consider risk-off environment under the 8 and 21 day. As you can see, very choppy. It's a bit of a guessing game, but this is especially key time to long the strong names and short the weak names. You don't want no hero trades. You don't want to call tops, buy bottoms. We don't care about that. We're trend traders. We just want to get on part. Long breakout, strong stocks, short breakdowns of weak ones. It's a simple game. All right, we're just trying to keep it simple out here. So going forward, we're definitely gonna watch how the SPY move, how the Nasdaq, how they're all moving, where they're finding support. But it's very, very, very important to realize we have a huge Fed meeting next Wednesday. I believe that'll really mark how the market's going to move over the short term, at least the next 2, 3, 4 weeks. The general consensus is that if we do not raise rates, we should go higher, and if we do, we should go lower. But as you know, it's never that simple. Never is. All right, so going forward, a little bit more, take less trades, only the ones you love. You don't need to be in every name. You don't need to buy every dip. And just, know your levels, know your risk, know when your stocks have earnings, and just try to keep it simple, folks. All right, long the strong names, short the weak names. All right, it's another good week out of us, though. We had a decent week. We really did well with this Everbridge. So take advantage of IPOs, find momentum names, ride out that momentum, and keep it simple, folks. All right, that's all we got for you this week. Good luck and happy trading. We'll talk to you next week.